Good evening. I'm Peter Resnicek from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly for Sunday, December 12th, 2021. Title of this video is Risk Off, but risk off with the question mark at the end. So I don't want everybody to think that I'm talking bearish here or that it's completely risk off. I just want to point everybody towards some mixed signals that I'm seeing in the market right now. The market's in a big balance area right now, about 4 days. We're going to definitely talk about that. We're also going to touch upon something that I talked about last week. If you recall, I discussed the relative strength in utilities and consumer staples and was saying that is not the most bullish sign, that if the market is really firing on all cylinders, we don't want to see those defensive sectors rallying hard. Well, those sectors actually rallied even more this week. So we're going to go over those charts as well. We're going to look also at a little bit of divergence between the S&P and the Nasdaq, with the Nasdaq lagging a bit, which I also don't really like in terms of a risk-on environment. And last but not least, we're going to take a tour through Fangman plus T. These are, of course, the stocks that me personally, I am most enamored of, for lack of a better word. I trade these more often than anything, and a lot of them are just lagging. For every name like a Microsoft that's really strong, there's an Amazon that seems to be falling apart. Then at the very end, as usual, I will also show you exactly how I personally am positioned going into next week with my weekly options advisory group, and then I'll give you a better idea of how I really feel about the market. Okay, let's begin on a pretty granular level. We usually don't start this way, but I thought I would switch it up a bit because it's important to get a grasp on what the market is doing exactly right now. Most of the past week was spent in what we call imbalance. Balance is essentially when the market goes relatively sideways and you have a compressed range in terms of highs and lows, and those highs and lows are relatively equal, but more importantly, and we can really only see this through the lens of market profile, when the value areas are relatively equal. And we had extremely equal value this week. Remember, the value area, if you recall from last week's discussion, is where 70% of the volume of a current day in the ES goes off. And that value area is denoted by these blue squares here. And look at, these are the last 4 days. And obviously look at the 3 days here before Friday, almost perfectly identical, with the tops basically almost the same, and then here you have overlapping to up on Friday, but still a lot of that value unchanged. So this is the balance area. Just keep that in mind going into next week, that we have something in play which we call balance rules. And these are just basically rules that give us a framework for how the market may react to this balance. So we know that according to these rules, the market can either gap up and go, meaning it'll look above balance and go. I shouldn't say gap up, I should just say look above balance and go, meaning continue higher. Okay, look above balance and fall back into range. Look below balance and keep going, or look below balance and come back up into range, or remain in balance. Now, given that we are now here, which is at the green line, that's the current price here on late Friday afternoon where we settled, we should probably be thinking more about the initial scenarios, the first ones that I mentioned, which would be look above and go higher, or look above and fail and come back into range. Those are the two scenarios that are probably most plausible for next week, and they're very, very important. If we look above and go, the market should be off to the races and will probably go quite a distance. I like to think it's at least the height of the balance area, which is important. If the market looks above and fails, meaning we say this is the top of the balance area here, we come up and come back down, this is important because what the balance rules tell us is that the market will more than likely travel to the low end of balance. It'll go all the way to the bottom. We call that rotation. It'll essentially rotate from the high end of balance to the low end of balance. So keep that in mind next week. If there is this sort of look above and fail and come back in, you can often put on a bearish trade and you'll come down to the bottom of balance. Now, what's important to note, even though it seems like it's pretty far away at this point, is that if that was the scenario that would happen, we do have a very large unfilled gap below us. And I've just marked it off here with these these lines here, okay? Enormous unfilled gap between these two sessions here that is unfilled. Carry it forward in your narrative. This is what I talk about every day in my Peter's Pre-Market Perspective, talking about these different dynamics and nuances that you need to carry forward in your narrative. Just because price has moved a little bit away from them and it's not right on the chart that you can see without scrolling, it doesn't mean it's not there. And remember, the market doesn't like these unfilled gaps. In no way am I saying in this video that this is what's going to happen, that the market's going to roll over and come down hard and come to the gap, but I'm just telling you what you should be looking for if that look above and fail scenario is essentially the scenario that plays out next week. You would want to know how far could the market go. And what I'm telling you right now is the market could easily travel, like I said, to the low end of balance or deeper all the way into this gap here, which would put the ES all the way down at around the round number 4,600. So just keep this in mind in terms of potential scenarios that could play out. Balance, the market is in balance, and balance rules are definitely in play. Let's take a look at some of those defensive sectors that I was alluding to in the introduction to the video and we talked about last week, namely utilities and consumer staples. This is a chart of utilities here, and notice how it acted over the course of the week when the market was really doing more of this, just kind of sideways. Notice the trajectory here over the course of the week. In the last 5 sessions in the utility stocks, really kind of hard up as opposed to a market that has really just kind of been stuck in range. And again, it's just one data point, but it's something that you should be carrying forward in your narrative, is that if you are a longer term bull here, or you're of the opinion that now because it's the end of the year and it's a bullish time, or you want to commit a lot of money to the beginning of the market, this is a dynamic that doesn't really make sense here. It's not overly bullish to have these more defensive sectors be acting as leaders in the market. Same situation with staples, but even more bullish. Look at the consumer staples XLP. I mean, absolutely just massive increase over the last 5 days. New swing high up in that 74 level. So again, same exact thing. If you're a longer term bull here, or you think this is the start of another leg higher, just be aware that this generally speaks to a more risk off environment when the money is flowing into these types of sectors as opposed to the more growth oriented sectors such as technology, etc. Let's spend just a very short moment on the S&P and the Nasdaq 100 just so we can see the divergence between these two sectors. It's not really all that much, but it's there. And I just wanted to point out how that NDX continues to lag a little bit, being that it's more representative of tech and growth, while the S&P looks a little bit more bullish. So this is obviously a daily of the S&P, and we've got a channel high here, which I'm going to touch upon a little bit later in the video. It comes out to about 47.75, and just remember that 47.75 number because I'm going to touch upon it later. But obviously this is the balance area we were just talking about. Seems to me that the trajectory should be higher, balancing to higher, and if the S&P was to move up in the next week, this is probably going to be the target, taking us to the top of the channel. So now, in contrast, look at the Nasdaq 100 and how much it is lagging and how less bullish this pattern seems. You can see that the balance area here is very sideways. It doesn't have that moving up dynamic that we got into the end of the week on the S&P. And if we look at the same channel, if we drew the same lines in the NDX, look at how huge the distance is. There's very little chance, at least in early trade next week, Monday, Tuesday, or whatever, that we would be going there. So again, just to recap, the point of showing these two charts is just to drive the point home about this slight divergence between the S&P and the Nasdaq, and how the Nasdaq 100, being a much more tech and growth oriented index, does seem to be lagging much behind the S&P and seems to be stuck more in a range, especially if you look at highs to lows here and just draw simple highs, lows, so you can see the range recently of the NDX. Where is current price? Is it in the upper third, middle third, or lower third? This is a simple trick that I use all the time when I look at charts that are somewhat bracketed to give me an idea of how bullish or bearish it is. I just want to know if I broke it into 3 bands, is the current price in the upper third, which would be very bullish, the middle third, which is very neutral, or in the lower third, which is bearish. And obviously in the S&P, if you drew those lines, you are right smack in the middle. You are definitely in the middle third of the recent range in the NDX, which again points to a slightly more risk-off environment, as I've been calling it in this video. All right, let's take a quick look at some of the divergence between these Fangman plus T stocks. As I always say, my favorites, the stocks that I trade more than any others, are these Fangman plus T, and some look fantastic and some look not so good. And the reason I'm going through all this to show you some of the relative weakness in some of these names is, again, just to underscore the point of what this video is about. Remember, risk off with a big question mark, all right? So Apple obviously is the first one we're looking at here, and just looks phenomenal. It's been an incredible rally. I, for one, am very disappointed in myself that I was not more aggressive in this stock or not really trading it as of late. We've made some decent moves in this stock over the course of the year, but I'm not participating in this particular move, and I'm kind of kicking myself for that. But obviously stock looks phenomenal. Not an area right now where you'd be initiating new positions, obviously because of the sheer overextension from trend and from 20 MA, but definitely one to look at. But let's look at some others. Okay, Facebook, again, back with that theme of lagging. Huge move from the 300 lows here, but since then, not much, just kind of lagging. But look at where the downtrend is here. Still not anywhere near the downtrend, still has a ways to go. And when it gets to here, at about that 340-ish level, it's going to find some resistance, so keep that in mind. Okay, Amazon, probably my favorite stock of all time. I've traded this stock in all time frames very, very much. Look what it's doing here. Absolute relative weakness. I mean, you have to admit, the chart looks horrible. It's just not going anywhere. And look at how bearish it was on Friday in the face of a market that was relatively bullish on Friday. And yet the stock had a huge down day and is right back to the 50 MA, well below the 20. And again, talking about in relation to range, where is it? You can just divide into the upper third, middle third, lower third. Notice that it's moving into the lower third just of the very recent range. So again, not very positive price action here in Amazon. Just another data point to carry forward. Which brings us to Netflix. Same thing. Is it going up? Is it going sideways? Or is the stock actually going down? I would say the stock is actually going down. Look at the rollover. You had this higher high here, then a move which took back 100% of that rally, went lower, and since then, look at the price action. Absolutely just lackluster, and in the face of the market, which has been relatively strong, the stock has not even been able to get back up to this point here at around 640 where it broke down. So the trajectory for Netflix is actually down, and it could easily see the mid 500s where that uptrend line is meeting. Google, not bad, looks pretty good, kind of some sideways action. Looks like it wants to get up to the top of its range, but kind of a very similar chart to what the S&P is looking like. If you think about it, just kind of a slow grind to the upside, kind of balancing to slightly higher. Stock still looks okay here, but again, no major breakout. I wouldn't say it's like especially strong here at all. Nvidia, very important stock, I think, with how people think about tech and forward-looking tech, etc. Probably still going down, but in the context of a huge rally. So you could probably cut it some slack because it's more or less probably consolidating this huge move, taking some of the froth out of it. But again, ask yourself the question, is the stock going up right now? Like Apple, for instance, the first chart we looked at, it's obvious it's going straight up. Is this one going straight up? No, it's actually just kind of stuck in a range and looks like it's just kind of dribbling lower. So if Nvidia was to have a turnaround here, what's the secret sauce as to when and where? Very simply, just draw this line here, connect all the highs, and when you finally cross over those highs, then you've got a new uptrend in place. But for now, the stock is just acting in a very lackluster manner, much like many of its Fangman plus T brethren. Which brings us to Tesla, the last stock of the Fangman plus T. Basically sideways, huge kind of a wedge here. If we draw it like this, and look where we are, just kind of in the middle of that. You can't really say that this stock is working off the froth of a huge up move, because this was the huge up move, which was the 900 to 1200 breakout. And since then, look what happened here. You went all the way down to 950, and you're just kind of hanging out just above that. So the stock definitely has some work to do. I do think a retest of this 900 area would be a buy, which would set up a move at least to wherever the downtrend is existing. But for now, it's really kind of in a no-touch zone for me. And again, just kind of illustrating more how a lot of these big growth names are acting in a very lackluster manner. And that to me points to a more risk-off environment in the bigger picture than would if these stocks were stronger. Which brings me to what I'm doing. This is where the rubber meets the road. Remember, unlike other pundits out there who don't actually put their money where their mouth is in front of lots of subscribers, I do that. So when I tell you my ideas on the market, I have to also show you how I am executing those ideas and how aggressive or how I'm positioned going into next week. So all that being said, how am I positioned in the next week? Pretty neutral, not really heavy. I don't have a lot on. If you look at here, these green areas here that you can kind of just see behind me, those are the trades that are open in weekly options advisory right now. And the main one really is this SPX spread right here, which is actually bullish, but it's bullish with the caveat, I should say, that it didn't cost us anything. You know that my MO is to put on complex spreads that target certain areas, if I can do them in ratios or unbalanced butterflies or broken wing butterflies, so that I don't have to pay a lot, so that if I am wrong, I don't lose any money. Earlier in the video, you recall, I said 47.75 was important in the SPX because it was the top of that channel as it was going across. And it's where I said that if the market rallies early next week, it probably would go. Well, if you look at this spread that I've set up, and it took me a couple days to enter it. You can see here I was entering on December 9th and then again on December 10th on Friday. What am I doing? I am long the 47.50 call in the S&P. I am short 3 of the 47.75 calls, which are 25 higher. And then all the way up at 48.20, I've bought 2 of those 48.20s and then also 48.50s. I did it slightly different both times just to get the pricing that I wanted. I'm just long those 2 to cap off the margin. They don't matter. Essentially what my position is really long 1 option at the 47.50 and short 3 options at 47.75. And again, the reason I like that a lot is because that 47.75 is up against that top of that channel. So I do think there's a chance that the S&P goes higher into next week, but it's probably not going to go past that line right away. And the beauty of this spread is that it has an extremely short duration. It expires on Monday. So I like to call that time on our side. Remember, whenever the duration to expiry is measured in hours and not days, you want to be in spreads that really leverage shorts as much as possible. It's those situations when you have an idea of where price could be by the end of a day that you really want to exploit unbalanced butterflies, broken wing butterflies, etc., to really get that leverage from the options that you're selling, which are really just financing those options closer in that you're buying, and you can get that spread to really expand in your favor as the day goes on. So that's basically how I'm structured. It's really my main trade. Obviously, there's a couple others here. This Facebook is really just a remnant of a bullish trade that I had on for this week. Didn't really work out, but you can see here I've made back all of the debit. The red items are credits that I've sold, and I had a butterfly 340, 345, 350 targeting that 345, which has now moved down to about 340. Remember, I talked about that when I showed you Facebook. I said that downtrend is coming in that 340 area. So earlier this week, I had a butterfly of 340, 345, 350 where I was targeting that area. Didn't really work out. The most the butterfly ever expanded to was about 50 cents. It was $5 wide, paid about 35 cents for it. I was looking for a bigger gain than just 50 cents on it. Didn't really work out, but I had plenty of naked puts sold at decent prices down at the 300, and those remain for next week. So I am short 300 puts in Facebook for next week underneath the support. I do have this Docusign, which is The stop on it is really the size. I purposely only did it as one contract. Basically, if you're familiar with Docusign, the stock got destroyed and since then has moved up, and it was peaking up into its gap. And as it started to trade into its gap, I put on a ratio spread that was relatively wide of 180-200, basically long the 180 call, short 2 of the 200 calls, thinking the stock could move higher. I paid 59 cents for it, but again, just one unit, it's one contract, so if this doesn't work out, it's a total loss of $59. And last but not least, the BBBY, which is actually a bearish trade, believe it or not, 99, 95, 75 put broken wing butterfly. What does that mean? Very simply, look at the chart of BBY and note that there is strong support at $95. So essentially, real simple, I'm long the 99 put, I'm short 2 times of the 95 puts. That gives me a max potential profit of $4, and then I'm long the 75 put all the way down, way at the bottom, just to cap off the margin, just to make it like a butterfly. But that particular put doesn't really matter at all. And that's all for this week. Thank you, as always, for spending just a little bit of your weekend with me. Before I get into the recap, if you could please click the like button on this video and also subscribe to this channel so you can be notified whenever I post new content. Risk off with a question mark, important. So think about all the things we talked about. Remember, everything that I mentioned is one data point. It takes lots of data points together to move a market, but from my perspective, it seems that there are some data points that are pointing to a more risk-off scenario than a risk-on scenario. So just go through the video, mark all these things down, and as things keep progressing and we move closer and closer to the end of the year, keep all of these things in mind. Also, I didn't mention this earlier in the video, but next week is a Fed meeting. December 15th on Wednesday, in the middle of next week, there is a Fed meeting. They've been pretty transparent as of late, so I do think the market is pretty much in sync with what it already knows about what they're going to do, but there is always just a little bit of a chance that they do put out some sort of a surprise, which they can do at any time. So just be aware the Fed is meeting next week, all right? If you'd like to trade live with me, but more importantly, not just get all these trades that I put out, but be privy to my guidance day in and day out. Please understand that this whole weekly options advisory thing that I do is so much more than the trades. The trades are great and they stand on their own. I'm very proud of the track record that I've put together over the last few years, but it's so much more than that. It's really the guidance that I give throughout the trading day. I'm recording What's Peter Thinking audio messages. I'm going live and doing live presentations multiple times during the week, sometimes even pre-market, giving my opinion on what's going on at that very moment. I'm constantly helping new traders in our pro trading room. If you're a member there, you can ask me questions during the day. I'd be happy to answer. So it's really just like a whole package of guidance that I do in the weekly options advisory. If you're interested, click the little link that is up there in the corner of the screen, or hit the link that's down below, shadowtrader.net/options, and I'd love to see you there. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.